going to be going over my process for coming up with trade ideas and giving a few examples. How I figured I'd do this is in two parts. The first part, I'll just go off the top of my head and what is currently in my mind. I think it'll be quite interesting to see the contrast of what I am actually doing currently and how that's working for me, and then I'll think about it a bit more deeply and potentially make a second part to this with that. So to start with, when I come up with a trade idea, I do it in 3 steps, and I figured out the right order that works best for me is first frame work, then the bias/narrative, and then after that is the entry technique. So what these 3 things pertain to is that the framework is what I can actually see in the chart. So it'll be some form of if I can use this tool, some form of a pattern, let's say something like that. And then I have an expectation based on this pattern. And for example, this one might be let's say a failed bull flag. So a sharp low, run up, and a bull flag. And my expectation is that rather than continuing higher, I'm expecting us to attack this low. So that's my framework for the trade. And once I have a framework, I then see how that fits in with the bias and narrative. So in this particular scenario, let's say we are bullish on the higher time frame, and this is the London low maybe, and what I'm expecting is that the day opened up, we've probably got midnight over here somewhere, and how that fits in with the bias and narrative, if I even drag that out. So let's say that's midnight, and I want to be buying below midnight, but we're above midnight and I'm bullish on the day. And so that fits in with the bias and narrative because I'm expecting us to go lower before going higher. Then it could also fit in with the bias and narrative as in I'm expecting another time element such as the 7 a.m. Judas to go lower. So let's say 7 a.m. opens up just here. And my expectation is that the 7 a.m. Judas will go the opposite direction from the actual move, and the actual move is up. So all of that fits in with the framework I came up with. So by starting with the framework, I'm not trying to form fit a pattern and look for a pattern that doesn't exist and try and fit that into a bias, but rather I'm finding what pattern exists and seeing how that fits in with the bigger picture. Because if I was just thinking of, okay, well, this is the daily candle. I'm expecting this big green candle, and just make that look nice. That'll do. Expecting this big green candle, and then if I drop from here down to the lower time frame, and I'm thinking, okay, look for longs. Okay, we've pushed in a low. I'm going to wait for it to drop down here, and then I'm going to buy here at the midnight price. If I'm starting off with the bias first, then I'm going to force this into the narrative, and basically skip out the framework. At that point, I'm now completely. What am I doing? I'm completely crossing this out and basically going straight to bias and narrative, bullish, entry technique, buy, sell side. And then what's going to happen is I'm going to go and put, okay, cool, I'll buy down here, and price is just going to go straight down and I'll take a loss. So by coming up with a framework first, it allows me to actually use the information that is in the charts, like this pattern exists, it doesn't not exist, it's not a bias, it's not a narrative, it's not this pattern isn't something that I want to happen. This is something that's happening right now, and I can also have a very specific expectation of what I could expect. If I have enough data behind it, I can also know that, okay, 70% of the time we're going to go down and take out this low. So I can have the probability behind it as well. And I think that's a much better way to come up with a trade versus going on the bias narrative and then straight to entry technique, because the framework is essential. A few other examples of a framework real quick could be, another one could be, let's say we've had a big up move, maybe the previous day, a really big up move, and I'm still bullish, we're still going higher, and then we just consolidate a bit. Now, the framework I might have is that I want to see us take trailed stops. Maybe there's a low down here I want to target, or if there's a really large range, I might expect that, okay, we'll engineer a low, entice longs, and then take out that low. And that could be my framework for either a short on the way down, or if I'm still bullish, then that could be a framework to go back up. So you could use the framework in those kinds of ways as well, where you have we've had a big up move, we've engineered an obvious low and moved higher, and my framework can be to target trailed stops. My expectation is that there's a high probability that we will target that low to take out whoever trailed their stops who are trying to catch this move. Then also the framework could be on the other side of that, once we've taken those stops out and we're still bullish, then the framework is that we've taken out stops, the trailed stops, and the narrative is that we keep on going higher in the bias. That's another example of a framework. What I think I'll do now is actually go on to gold, and I will literally just scroll back a whole bunch and find a random date to use, and then see how I can go with just trading through the day. So I'll go, say 21, do somewhere in there, somewhere here. Cool, and zoom in a bit and see where we're at. And also I'll drop down onto a live time frame. So already I can see on the daily roughly where we are, but that's not as important. However, you can see we've got relative equal lows. Previous day had this big dump, and then this day didn't do too much. But the main thing is to start off looking for that framework. So I'm going to drop down onto a low time frame. Fast forward to the time of day I'd be usually coming to the charts. So there's Asia, there's London, cool, so that's 6 a.m. That'll do to start with. So coming to the charts, I'd begin getting an idea of what I'm looking for. Most recently, we're right in the middle of the range. We had this sharp sell-off. There'll be a lot of liquidity sitting above this high, which is also the Sunday open. But then also, once we've rallied up like this, whoever's trying to catch a long from these perfect equal lows in the daily we saw, will want to trail their stop somewhere as well. We've got this obvious low down here. We've engineered a low. We didn't really do much in the way of enticing above, and then we drop below. So I still think we could be taking out trailed stops on either side of the market. But I'd favor us targeting the lows first. The only problem right now is that we are right in the middle of the range. So what I'd do is I'd mark out the key levels, such as the midnight open and the new day opening gap as well. So just find that. So there we go. Midnight, and the new day opening gap is also important. And now I can see where we are in relation to the daily open and fair value for the day. So next up, what I'll be looking at is obviously where we are in this range. Because this isn't a very clear range, you can, unless you use just the Sunday open, we have dipped down into the 50% point from the Sunday open. So we're kind of just consolidating right in the middle, and then from the low to the high, we fell just short of it. So as I mentioned before, it'd still favor us going lower, but then what I'd want to see is the framework on the lower time frame confirm that, and that can also be involved with something such as the 7 a.m. Judas. So currently I don't see too much other than we have balanced the entirety of this range. We have some biases up here. At the moment, currently it does look fairly bullish. You can see this bullish order flow. However, we are also leaving relative equal lows. So a really nice strong move out of here, leaving this wick unfilled and a big displacement. However, once we pulled back, we've engineered sell side pull at this new day opening gap, which a lot of the time is done intentionally for the purpose of returning to. So they want to invite buying and selling within this range. So they'll first engineer a liquidity pull in order to come back to it. So now that I have that kind of idea, I still don't have a framework yet. I'll drop to low time frame and likely fast forward. Hopefully it actually loads. The 1 minute time frame. Fingers crossed. There we go, sweet. So fast forward towards 7 a.m. Got very smooth highs up here. It does look like a bullish scenario currently, but there's nothing in particular. There we go. Now we've taken buy sides. Now it'd be kind of fast forwarding, seeing how high up it wants to go, if we can reach up towards this high or not. Then as we approach 7 a.m, I'll prepare to see what we're going to get. So we have hit premium internal range from this range. We're very close proximity to the London high. And we're leaving a lot of smooth lows behind. Also these relative equal lows down here. On the 15 minutes, you can see that overlapping the majority of this wick, so clearly engineering the pulls down here. You can also see relatively smooth lows all the way up through. So the question is really just how high to a premium do I want it to reach? And then the framework can be 7 a.m. Judas, either fading the Judas if it pumps, or if the Judas wants to send us lower to then head higher, which is also a possibility, then that could be the go. But I favor the idea of us running up into buy side, potentially hitting this high, and then selling off from there. May even be a clean order block we can be using. Potentially this could be a propulsion block. So it's up at 1740s. So yeah, I'll play through, mark out 7 a.m. as we get to it. A bit of volatility. And there's 7 a.m. right here. So we had that really aggressive rip up into that buy side pull at 7 a.m. or going into 7 a.m. Just tapping it lightly. Now what I want to see is, does it have a willingness to take out this high again? If we do break down, does it break through this low with speed and distance? And basically I want to get a gauge on order flow because my bias and narrative currently is that we've had this large sell-off. In fact, that's probably the best framework I should have gone with earlier. We've had a large sell-off over the last multiple days, and this is the first obvious high we've engineered. We haven't come back to it yet, so it does make sense for us to reach up to this level. and targets trailed stops. The only thing that makes me less sure about it is the fact that we haven't returned down to a discount of this range. So my higher time frame bias and narrative is that we will attack trailed stops, and I think that's what would be focused on. However, yeah, it could go either way basically. So the bias isn't super clear for me right now, and so I'll really be watching what 7 a.m. does, and won't necessarily be taking a trade during the 7 a.m. Judas, but maybe later on going into 8:30. So yeah, really still just gathering information, but the main framework that I can see that fits in with the high time frame bias is that we are bearish because of perfect equal lows, and the narrative and bias can be to target trailed stops, go higher to go lower. So I want to see if we get any sharp reactions after hitting sell side like that. So that's looking quite strong. Still no real trade idea unless I want to just catch a run higher. There we go. And now we're at 8 a.m. So 7 a.m. didn't really do much, went sideways a bunch, and then continued pumping higher. We've already had this enticing move up. We've then had a second enticing move up. We've been climbing pretty much without stopping since 4 a.m. So what I want to do is target trailed stops. I really like the fact that the 7 a.m. Judas clearly went up. There wasn't any Judas lower, and these enticing runs higher, hitting these key pulls and not quite hitting this impulse high, but definitely getting above this. So what I'll be looking for is for a clear change in state of delivery to bearish order flow. So getting a nice bit of speed and distance below the swing low. And now I want to see, does it get a really sharp reaction and just keep pushing up, or if we can begin to get a failure swing and continue to show weakness, then I'd look to get a entry. Already we've taken out this significant pull. You wouldn't want to see it come back down here if we are bullish. So what I'd be looking for is for potential failure swing entry. It's not the perfect scenario for a failure swing, but it could be a scenario. That could have been a good entry. Okay, nice displacement, clearly showing some heaviness in price action. So usually on gold, I've found that it isn't profitable to short below equilibrium of the short-term dealing range, because we tend to basically always at least reach that midpoint, even if it's only just. So what I'll be watching for here is for us to reach up to a short-term premium. And once we do, if we begin to show that we aren't planning on hitting all the way up to this high, then I'd look for us to begin to break down, and I'd jump in on that. Seeing as my targets are way down here, this new opening gap, the London low, some nice smooth lows down here as well to target. So I think it's very reasonable to catch the next leg down, depending if we can reach the equilibrium point. There we go. So 8:30 news. Running out buy side again, sweeping that 805 high, hitting this impulse high, also hitting these old relative equal highs over here. So probably give this a minute to settle down, and if we can begin to break down nicely as well, like that, this can be an opportunity to get short. Because of the volatility, I need to have a better way of defining risk, because we could always run all the way back up to here and still fade over yet lower. So don't really have anything just yet. There we go. Looks like we're heading up. See if there are any. No, there aren't. Cool. Still nothing for me to do just yet. Now the question is, am I still bearish or am I bullish? We did technically drop into this discount sell side. Oh, not really a discount. Respecting bullish order flow, and as I mentioned before, there are two scenarios. Head down for stops, but also these trailed stops up here are the main draw on the high time frame. There still wasn't a really clear framework for me. Like, I don't see anything that particularly stands out. Like how we've been digging into these highs multiple times, eventually selling off during the 850 macro. So this is at a key time of day where we are likely to put in a high. If this is a turning point, then I'd be expecting the upper portion of this fair value gap to remain unfilled. But needs more information for sure. So that's looking pretty good so far. And in a scenario like this, ideally a failure swing would be nice, because then I can look for us to hit a key point of interest. I do kind of like this because we have been respecting the upper portion of this fair value gap. We hit this order block, and there's another framework I can be using, which is trailed stops once again. So we had this regressive move up at the news, and then this is the first really obvious low we've engineered where trailed stops would be present. Because of, yeah. So essentially, ideally what I want to see here is if we have a run higher but then fail and begin closing a candle down in the lower portion of this range without taking this low out, then I'd get short with a stop loss above the failure swing high. So like that, that's good. So at this point, I'd be looking to short. I'll just use that. With a stop above the failure swing high. Looking to, at the first point, target that, and then see if we can reach down to that midnight price and smooth lows and the new day opening gap as well. So that's a nice displacement low. I like the speed and distance we got below this low so far. So I'm going to keep on holding. And I'll move this a bit as well. Aware that this swing high is the new swing high. So there's a good chance that it could run all the way up to there, soup this out again and roll over. So I want to keep my stop loss in place. However, not expecting we should have to run up into this inefficiency again, because if you look at this inefficiency, we've got plenty of price action in this lower portion, and this upper portion is remaining unfilled as expected. Just watching this point here. So that could be a place to add. Keeping the stop in place. It's adding above that 830 high. So that goes to the entry model, super old high entry model. The framework was to target trailed stops, which we did hit these trailed stops already. I liked the speed we got below it. However, it's quite a slow grind back up now. But yeah, looking for it to roll over. I don't want to be moving my stop, although this technically is the up closing range. So this is technically internal, but I don't see any reason for it to go above that. But in an ideal scenario, if I was entering a trade here based on this soup, my stop would actually be above this high. So I might have made a slight mistake here where, because my entry model was the failure swing entry model, once we hit external range, then the invalidation for this particular entry no longer becomes the invalidation for a continuation. With this particular entry model, with the failure swing, it just means that it should continue pushing towards this low before taking out the failure swing high. That once I've hit that that external range, I think you can then go from ERL to IRL, which includes this high all the way up to here. So yeah, it's possibly, when I have a model like this, ideally you'd have on, enough to take a partial at least, and then be holding a runner for your ultimate target. But when I'm finding a entry that's internal to external, I want to be prepared to take something off the table so that I can sit through the pullback to the actual invalidation of the trade. So because this doesn't invalidate the trade, I am going to move the stop above the actual invalidation. But in general, like, what I should have done here is identify that this particular entry model meant that once it hits this ERL, it needs to continue pushing lower, and I should ideally be taking at least a partial to be able to withstand that. It might not even take out this high, but if it does, then it doesn't invalidate the trade. So to take out that high, so far rolling over a bit, but still looking kind of strong. Give it a moment to show us what it wants to do. What's the time? Almost 9:30. There you go, 9:30. So usually on gold, I don't really trade much past 9:30. And there's probably the short coming in now as we hit this internal range. However, already, like, it's showing bullish order flow still, respecting this fair value gap, heading up towards these highs. We are technically bullish. We did come up to deep discounts, but we spent a bit of time down there, and you could probably see this as the 9:30 Judas lower to go higher. But yeah, essentially I wouldn't be touching this at this point. But you can kind of get a feel for how I come up with the trade. It wasn't as straightforward as I would have hoped. The framework wasn't as obvious. The only framework I could probably say was definitely there is really large sell-off. The first obvious engineered high, I want to target that, but that's kind of a higher time frame framework that kind of becomes the bias. In hindsight, how this should have been traded is identifying that as the framework, and then how that fits in with the bias is, well, we've got smooth lows down here, so I want to see it climb up to this premium and then sell off. And so looking for a 7 a.m. Judas low, and then for the entry model, I'd been looking for a soup of an old swing low. So this is technically a breaker block. I don't really use them that much. And then we have this inversion fair value gap over here as well. I think in this particular scenario, I just wasn't sure how deep into this range we would go. I did identify these as being fairly smooth lows. However, this is the only clear fair value gap we have here on the 15-minute chart. And we did drop into that just ahead of the news. So yeah, really it was a bit tricky to get in. The framework suggested going higher, and the 7 AM Judas initially went higher. Enticing longs, dropping down, hitting the sell side. The only problem is that we didn't get a really clear CSD. I mean, technically this is the order block. So I suppose I could have identified that range that took out the swing low as being the actual order block, which is why explains why this came all the way down here, sweeping out that 8:30 AM low. But wasn't particularly a fan of it because this looks like unless you identify this swing low, this should be a balanced price range, it looks like, and then it comes all the way below it. And so it just wasn't super clear with what I was suggesting. So with this particular day, it would have been just probably no trade or taking maybe one loss, and which is fine. I would like to see if I can come up with another example because that one wasn't the clearest. Go over here somewhere. Go straight to 7 AM. Okay. So once again, mark out where the midnight's at. You can see we've been spending most of the time at a premium. We've taken out this buy side pull. We've hit the midpoint between these two pulls. And also, we have a new day opening gap up here, which it looks like we've probably just gone nicely into. Yep. So currently what I'm looking at is how we had this clearly engineered pull at the new day opening gap. We've souped that. We've also hit the midpoint between this pull and this pull up here. Gone very close to that midpoint, which is a lot of the time holds price at bay. We've had this large up move overnight from Asia. This is the Sunday open. We're currently on Monday. And then we left relatively equal lows during the London session, having this rally up, taking out that buy side, and then dropping back into the range. We've already climbed up and hit this order block there. So to me, it is looking bearish. What I'd be expecting is for a 7 AM Judas higher, and then for it to break back down. I like the fact we've already taken out the sell side, and so if it is bullish, you would have to go higher and continue going higher. If it's bearish, however, we'll see it hit higher and then break back down. So that's what I'm looking for. So the framework is to target these trailed stops from this rally, and that fits in with the daily narrative of likely being bearish. Got these smooth lows down here, and we're just hitting a premium of this dealing range from that high to that low. We're just digging into premium buy side. So yeah, and you can see this nice large range up close candle at 6 AM going into 6:15, taking out all these smooth highs as well. Also, this order block swept out this old swing high, so looking really nice. I'd likely have this high marked out as well in case we do want to revisit this area. And yeah, just seeing what we want to do. Obviously, I don't want to sell at a deep discount. I'd like to see some form of a pullback to short-term premium. And then I'd be trusting that as a short. I like the fact that we've dug so deep into this wick already. There we go. So that's probably good for a short from here. So from this high down to this low, just make sure that's the right range. Taking out buy side pull here, taking out sell side. So using this dealing range, see we are definitely at a premium. And if I want to be really greedy, you can go for this high as the entry, which I might as well try. And I'll put on 3 so I can take a partial. There we go, that'll do. Putting the stop loss at ERL. Another thing to note is when I am getting an entry and we are pushing hard in one direction, I want to see at least some slow of momentum on the 1 minute chart. So you can see this wick put in here, that would count. However, if I'm looking for this high, I'd wait for this candle to kind of slow down a bit, and then I'd jump in. Because otherwise you can get caught in just a rally that just goes in one direction. So stop loss is external above this order block that swept out this high. We've already closed below it, so I don't believe we should come back up unless I'm wrong or we're bullish. So looking good so far. Showing a bit of weakness. And the confidence for this trade is the fact that we have the 7 AM Judas going higher, which is what we want to see. If this does get taken out, I'd then continue playing forward to around 7:30, and then if it still gives me a reason to go short, then I can try again, because 7:30 a lot of the time caps the 7 AM Judas. So it looks really good. No displacement low yet, but definitely beginning to drop a little bit. Getting towards that 7:30 time of day. Coming really close to this high though and completely filling in this inefficiency and getting above this busy. So slightly low confidence in it now, especially with this really strong closure, closing well above the midpoint of this order block. So it is looking a bit more dodgy now. If we do drop down below these lows, I'd be trading my stop to reduce risk. Cool, I don't want it to come back up there because we're now past 7:30. And the reasons mentioned earlier, it's not showing as much weakness as I'd want. And so if it is going to go lower, I need to see it roll over from here. Would likely even move my stop down to above the midpoint of that wick. So greatly reduce risk, still giving it a chance to move. Time of day is on our side and suggesting we should continue lower. The only thing that's not in alignment is the fact that we closed above the midpoint of this, but we did also run back above these old highs. So rather than using that high, which is nice, we can use that, but these highs are kind of a bit more obvious as a pull that was clearly engineered for taking out, and we did run above. So the fact that we did actually tap above that is a confluence. It's just the particular candle is closing quite deep in the range. We could see that as being a consolidation, however, as well. In a consolidation, we will disrespect both premiums and discounts of that range until we expand. And depending on whether or not we reversed prior to that consolidation, tells us what direction it's going to go in. So if we have with the phases of price delivery, you have consolidation. Consolidation always goes into expansion. And then from expansion, you can have a retracement and continuation, or you can have a reversal. But what will never happen is if we have a reversal here, then you're never going to see it go back up that way and continue higher. It's going to be a continuation lower. So that's what I'm looking for here. I want to see that this is the actual reversal. And now I see this as a consolidation, in which case we can actually disrespect internal range within this consolidation arrays and then continue to push lower. So I want to give the opportunity for that to happen, not get scared out because of the steep retracement, because gold does have deep retracements, and there have been times in the past where we've been caught out by that. Something that stands out to me real quick as well is this volume imbalance. I like how that lines up with where we're at right now, and want to see if that can hold price at bay as well. So yeah, so back to the framework, bias, and entry model. Framework is targeting trailed stops. Bias, we've taken buy side, hit the midpoint between these two pools, soups this clearly engineered pool of liquidity, and now we're beginning to go lower. If we do run above these highs, then I'd be watching this high, but then at that point it's getting lower probability and not really what I was looking for. Cool, I like how we swept out this internal range and we're breaking straight back down. If we begin to drop below this low, then I'd see that as being very good. Beautiful. Cool, so I really like that displacement lower. At this point, can happily move my stop to break even. I really like the facts that we failed to reach the midpoint of this wick. That's a signature of weakness, which is what I want to see. So if we can fail to reach the midpoint of this wick and actually create a fair value gap here, then that's showing that it's exceedingly weak and you can expect an outsized move. Also the fact that we've already swept out this internal range low. This price here, this order block, should have held quite strongly. However, so far it doesn't look like it's holding at all. We have relatively cool lows down here. We've already swept out sell side, and now we're coming straight back down aggressively. So looking really good. As soon as we get a fair value gap, I'd be wanting to sell anywhere over in there and expect the upper portion of that fair value gap to remain unfilled. So we do have a fair value gap. Just trying to figure out if it's worth it going back into it or not. I don't think it should, since it is quite at the premium. It might run up into there. And what I should probably be doing is identifying where equilibrium of this range is. So what I'm looking at is how we do have this order block with the 7 a.m. price. This is a signature of weakness with the wick and then displacement. And because of that, then I wouldn't be demanding it to reach all the way up to here. If I am right, then this should continue pushing lower, likely from this opening price. This bearish order block now. So I'll add to the position. Add 2. Keeping the stop up there. Stop could potentially even be lowered to above this fair value gap because that technically invalidates what I'm looking for. I'll keep it there for now though, but I'll keep that in mind as a possibility. As far as taking partials go, we have these smooth lows and then the sell side pull. What I'll be watching for is as we drop below these lows, try and target that midnight price. And then when price begins to slow down, then I'll take a partial. It's looking really good, looking weak. It's 746. New 15-minute candle, closing nicely below this inefficiency. However, with this being a consolidation, that doesn't really mean too much until we've actually pushed out of it. Because it can always continue to consolidate if it's not ready to move just yet. So it does end up going up to the equilibrium price. So looking really good. So right here, this looks really good as well. So to me, this is showing really nice bearish order flow. We even left part of this in unfilled, still pushing lower, so really confident in this trade. Want to see speed and distance here, and as we hit the midnight price, I want to see it continue to push lower. And depending on what kind of reaction we get, I'll take a partial. So we hit that price, we did get quite the reaction off of it, so we'll take something off here and lower my stop to probably keep the stop just above this inefficiency. Our next partial would be down at midpoint between these two pools. So we hit this sell side here. So likely when we did hit that midnight price, if this was live price action, I'd be looking for us to continue to push with a big candle like this. And as it began to form a wick, I probably would have got out roughly there with a small partial because we've hit significant sell side and a midnight price, so a likely place to bounce. But then at this point, looking really good on the short side. And what I'll be watching is the midpoint between this pool and external range. So I'll be targeting a partial down here. There you go, and you can see it did hit it. That would have been a partial, so I might as well take that off. And then after that, we have the sell side. So the next partial point would be deep internal range. So looking at this range from this low up to the high, basically what I do is I find the most deep discount array I can find, which what I identify is will be this swing low. So really deep discount swing low. And what I want to do is I want to take a partial as we hit that. Because a lot of the time we'll come down to deep discount and then have a retracement or reversal. So we're looking for that. And then after that, I'll be just seeing how far the last portion can go and trailing the stop down with it. There we go. So there's our partial. As we hit this low, we have just hit external range. So technically it can go from ERL to IRL and retrace all the way up past my entry. So what I want to do now is be trailing the stop at a reasonably close distance and just demanding that it continues lower. So I'm going to trail it down to here, demanding that it remains relatively heavy. The next point of interest would be once again the midpoint between these two pools. We also have this old swing low. We've clearly already dropped below that, so I'll be marking out this old swing low, simply because it's really obvious impulse low that we drop below. And then also using this again, looking at the midpoint between these relative equal lows and external range all the way down here. So that lines up really nicely with that old low as well. So likely a really good place to put a final take profit. If I hadn't taken off the 2 on this initial drop here, would have still had enough size on to hold 1 even lower. But I think that's more than a big enough move if we can get down to there, and I'll simply be trailing my stop as we go. As far as trailing my stop goes, don't have a particularly specific way to do it. I should probably just be following it behind a 2-minute candle. That's usually a good way to do it, I believe, but I don't have a really specific way just yet on how to do it. But showing a lot of heaviness, and then also as we create lower time frame arrays, then I can trail my stop as well. Cool, so if we can drop back below the midpoint of this wick with a closure, then I'll be able to trail my stop down to there. Not quite. There we go. So now the stops trails to above this wick. So just looking at the midpoint of this wick, I like how we retrace into it, ran a short-term high above it, and then now we're back below. So now I expect this wick to hold price. And I could even add to the position at this point with my trailed stop. So I might as well add one back on. just because I can. And then I can move that take profit and try and see if I can get another partial in. There we go. And then probably the next movement. So as we sweep out this low, I can run down equity. So that would have been the take profits as we drop down, getting near the midpoint. It doesn't always quite reach the midpoint, but oftentimes gets really close. But now I've got this order block, so trail that down a bit, and then see if I can get another low so I can get a better fill. That'll do. Take one off. Very nice. And then now we've got a runner to see if we can hit this impulse low right at the bottom. We do have a sell side pull sitting down here, as well as a bit of an impulse low down here. So as we hit the low end of this candle and this discount fair value gap, I'll be tightening up my stop quite close in case it does want to just hit that and retrace, which is quite a possibility after a big move. And the fact we are now past 830. Also, 830 was right here. 830 opens and has been expanding lower. So a lot of the time, 830 will become the 930 draw because of that scenario, which I'll check. And this is also a really key spot as well. So really want to time the stop now and just demand that it keeps on pushing. Looks like I might want to run back up. This is technically an order block, so it might be taken out here. There we go. So let's see how this plays out. Pull all the way back up above this high. 9 a.m. So yeah, quite high resistance now. It looks like we are doing some interesting stuff around this area and hitting 930. And as I mentioned earlier, with the we didn't expand away, so but yeah, 930 running straight back up to that 830 price. And yeah, just out of curiosity, I'll play this forward. There we go. And then hitting that external range, the impulse low. After dropping into that discount fair value gap first, having that retracement, and then selling off into it. But yeah, pretty good execution. Pretty happy with how I did there. I think the key things is that I recognized that we had taken significant liquidity because it was clearly engineered at a new opening gap, also the midpoint between these two pools. So I trusted this high should be intact. Also hitting a premium of this dealing range from the high down to the low. Seeing that we had these equal lows down here. And so trusting that the bias was lower and the framework that's fitted in with that bias fitted in with the framework of this impulsive low, really sharp rally. Everyone who's long through this range, they all want to trail their stops here. They also all want to trail their stops to these equal lows. Trusting that once we hit this buy side, this was the reversal, allowed me to not get shaken out by this strong up closing candle, which closed above the midpoint of this order block. Also recognizing that we can have really deep retracements, which I don't always expect because a lot of the time I'm used to having a strong order flow on NASDAQ or something where we might not retrace as deep, but in gold is perfectly reasonable. Also trusting that the 7 a.m. Judas higher was telling me that that time was in alignment with what I'm expecting, which is a framework within itself. And the fact that we've already swept out sell side, but then come all the way back down, made more equal lows, despite having already swept out sell side, and then having this failure swing back down, this was also a really good place to be adding to the position. It did pull back to equilibrium of this range, just below. But that signature of this long wick in the fair value gap was telling me that to expect an outsized move. The only kind of mistake I probably made was when we did hit this midpoint where I expected a potential reaction, I took a bit too much off. So probably I had I think 5 on, I took 2 off right here at this area. So rather than that, I should have just taken 1 off and then seen what wanted to happen right after. This was a really nice entry. I really like the fact that we had this long wick that we retraced below. We then swooped out a short-term high above it and then broke down below it again. So I expect this wick to add as resistance and send us lower, which it did. And then just because we'd had a really key PD array, I traded my stop really close and getting stopped out here, which I think is perfectly fine. But yeah, overall pretty good execution. And it kind of gives a good overview of how I come up with a trade idea. I'll give one more example just really quickly on NASDAQ. And this was from, so if we go to NASDAQ real quick, this was on Friday. So it was bullish on the higher time frame, looking for, we've just hit 20k, which is this level right here. I'll put the price on it. So we just hit 20k. When we hit a big figure number like this, what I wanted to see is us to pull 200 points above or below, or 100 to 200 points. As you can see, we already hit 100 points the previous day. So we already went 100 points above on this high. And now I'm expecting that we're likely to reach up 200 points above. So that's my kind of the framework is looking for that. And then on top of that, well, that's more the bias. But the framework in this particular scenario is this sharp high, a sharp sell-off, enticing shorts going into the close, and then an aggressive move back towards this high. So I know that there's significant buy side above this pull, and I want to target that, knowing that whoever was enticed short have their stops above this high. We can then see that we also engineered these smooth highs at midnight, like right at the 20k level, so really obvious engineered buy side. And I know I want to target this high, so that's my framework. Let's target the impulse high. I call this the knife twister model, where we have the only place for stops in this drop down really is above this high. In a clean model, it would be, you'd refer to these swing highs as well, but on the higher time frame, it becomes this high. And then looking for the entry model and how, sorry, let me clarify. Need to be a bit more specific. Framework. The framework in this scenario is the knife twister targeting these buy stops above the impulse high. How that fits in with the bias is that we've hit 20k. I'm expecting us to hit 200 points above 20k. So that's the bias and narrative. And the other part of the narrative is that this is the 800s below. So after hitting 20k, we then drops 200 points below and spend a bunch of time there trapping people short. So we spent a bunch of time, a good 4 hours trapping shorts below the 800s after hitting 20k. So everyone thinks that, price is weak, it couldn't get above 20k. And then have an aggressive move towards this high, showing that it wants to hit it. So bullish, we've already trapped shorts. I'm expecting us to go higher. Then looking for entry model, just looking for us to put in a intermediate term low, so clearly engineered sell side, taken out with this low, putting in an intermediate term low as long as we put a short term low to the right of it. And the short term low, I'd be wanting to see form below a obvious old low. Now the ones that stand out to me are the ones on the left side of the curve over here. So an old low, and that could be the entry model. So the entry model could just be, if we scroll back, see how it would have looked. Be looking at that and you'd be thinking, cool, I like how we've put in this low. This is clearly an order block that suits these relative equal lows below this old low. And so now I can trust that this order block should hold. As far as this range, I want to find equilibrium and make sure I'm buying below equilibrium. We have this really nice old low that lines up with that. And so I want to buy below that, of the stop below the order block, and look for us to run back up into the that buy side pull will be the first target, and then ultimately up to the 200s. And I won't use the buy sell buttons on this particular one, but you can see dropping into that pull really nicely, playing around a bunch. Then we have the NFP play out at 8.30 right now, and hitting that straight to that first target and climbing really nicely throughout the day, eventually hitting our draw. So that was a really nice play, and that was probably a really good example of coming up with a framework of targeting of the knife twister framework, targeting the impulse high before the drop down, seeing how that fits in with the bias and narrative that we want to hit the 200s above 20k, and we've already trapped shorts below the 800s, and then going from there to find the entry model and identifying the order flow in the lower time frame and exactly what entry I want to get. So yeah, that's about it for this video, and I'll probably have another think about it, see if I can clarify it a bit and make a quick part 2.